to the RationalMister.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Happy Thursday. 9:01 on the West Coast, Thursday, August 3rd. Probably expecting to hear Julian. My apologies. Julian is traveling today, so he was not able to make the call, and he asked me to fill in. So I'll try and do my best here to give you a bit of an update here for the market today. But again, my apologies if you were expecting Julian. He is MIA today. I suppose this probably isn't a terrible day to be MIA. There's not a heck of a lot going on here today, but there is quite a bit that's going to happen here, both after market here this afternoon and first thing tomorrow morning. So just an overview of what's going on today. Best practices, good old Brian, Thursday. Checking in on myself. What's sort of the major headlines overnight? Bank of England raises rates again. And really, I don't think this should surprise anybody. The Americans have to move first. They always have to have their rates just a little bit above everybody else because they are the world hegemony. And everybody really just borrows against the Fed. And then their respective local rates should keep pace with the Americans, but the Americans should always have like the highest rate. So anyway, point of the matter here is Bank of England is, we've talked lots about that crazy inflation situation. And they're trying to get sort of in front of the curve. And really, we probably need to wait probably a good 5-10 years to see what these Western nations actually look like on the other side of this great reset. So I think a lot of these countries are just not going to look the same. And I guess it makes sense. This is exactly what's supposed to happen with these major cycle shifts. So who knows what the 21st century is going to look like globally. So anyway, point of the matter here is the data prints today actually are relatively light even for the US market. And if anything, I often suggest you guys keep an eye, if you are trading equities and stuff here in North America or Europe, keep an eye on how Japan does. And you can see 2 days in a row. Remember, we saw Japan got wiped out there yesterday, and they got wiped out again here overnight. And darlings like that Toyota Motor Company that I was uber bullish on. I mean, it went zooming up, and if anything, now it looks like it's showing signs of exhaustion. So maybe on a half decent pullback, I can sneak my way in there. I don't know. It's not a bad name. Unfortunately, it's probably getting a little bit expensive now. You can see the broader market in the States. Like I said, we don't really have a hell of a lot of econs to work with off of today. And there are two major earnings reports coming out after the market, but there are a whole bunch. If you actually look at the earnings reports, you can see had some come in yesterday afternoon. Things like PayPal. I don't know. What do you think? Did PayPal kind of miss a little bit? Oops. And we've been seeing a lot of this lately. So, the irony of it all is that they might have actually done okay with earnings. It's just, yeah, in fact, here, PayPal earnings tops estimates. But it's almost like all those rosy earnings estimates and growth and stuff were priced into these assets, and unless they absolutely knock the cover off the ball, we see selling right out of the gate. In fact, I think I showed you we had Mr. Musk, everybody's favorite, automobile manufacturer put in an outside downside reversal after that's a weekly reversal after their earnings. So seems to be a bit of a reoccurring theme here of late that it doesn't really matter how good your earnings are, unless, of course, you come out and say we've quadrupled earnings and we're 10 times more than expectation. Then maybe your stock can hold on to these lofty prices. This one hasn't really broken down in earnest yet. It's just sort of fluttering right at that breakdown level. What's really interesting, another key reversal that really has performed nicely in the same space, and it makes sense because General Motors is kind of a shit show stock. We used to joke, 10, 20 years ago when I was a broker, that General Motors, they're actually a finance company that happen to have this side business of making really shitty cars. So anyway, there was the outside downside reversal there, and you can see it working its way down and almost hit its profit objective here this morning. And we were even talking about this in the level 4 class. And by the way, any TRI alum that is watching this video here today, or maybe we'll talk about it also in the after party a little bit, did send out a nice little intro email on some of the level 4's students' comments about the program and an introduction to, of course, to the fall program. I've already had half of the seats already booked up, and the level 3ers haven't even written their final exams. So I would imagine a big chunk of those level 3ers are also going to want to have seats in this fall program. So if you are interested in the option spread trading program that we've recently put together at TRI, you have to be a site alum because I don't like talking option strategies with people who don't know what they're doing in the market. But anyway, that letter went out. Geez, about 500-600 people that went out to yesterday. And as I said, about half of the seats are already booked up. So if you are interested in that program, you better get back to us. And if you didn't get that email, just DM me on the site or on social media or whatever, and I'll make sure that you get that intro letter. Anyway, point of the matter here is we were looking at General Motors as a bear put spread, and I like the idea of buying the 36s and writing the 34s. The spread was about 30-40 cents. And now you can see that the things almost hit the profit objectives. Anyway, so that trade's kind of come and gone. Anyway, that's what we were talking about in class yesterday. Probably a good example of not getting too excited in the marketplace. Had big outside downside reversal come in on this semiconductor stock again. They actually reported half decent numbers. I don't know whether that's going to load or not. You're going to load? Maybe not. Anyway, and yet the stock still got thumped. And I even put out a cheeky market commentary tweet kind of yesterday. Hey, a whole bunch of brokerage houses upgraded this stock, and yet the stock still got absolutely destroyed yesterday. So go figure. Anyway, this is a really good example where you can clearly see we have multiple market structure signals here. So if we do go through this, though, that will confirm the outside downside reversal, and it's a hell of a reversal bar. That's like 1, 2, 3, 4, 5, 6, 7, 8, 9, not like the previous 9 sessions all wrapped up in one candle. And then, of course, also too, hopefully you see that if that does fire, then it's going to be like one of these, what are you supposed to think if you see the market smiling at you if we go through that level? So we're at a really interesting inflection point. And if anything, as I had alluded to earlier, number one, we've got big, what the heck is it? Big econs coming out first thing tomorrow morning, and we got a lot of them. These are big ones, right? We've got the non-farm payrolls numbers coming out of the states tomorrow, and average hourly earnings and all those kind of fun data prints that, of course, everybody's all obsessed with in the marketplace these days. How tight is the labor market and all that kind of talk. Also, too, you can see in my country, there's a bunch of data also coming out tomorrow that will give us a little bit clearer idea of whether this employment picture is cleaned up a bit. Data that came out today, ironically enough, almost everything came out almost exactly in line with expectations. So I think probably the big thing that jumped out is, and this is what we should see happen through this growth cycle, is you should actually see non-farm productivity actually start to increase dramatically. And that was the hallmark of the latter part of the 1980s through the 1990s into the dot-com boom days, where technology, of course, drove productivity, which basically meant that companies could spend less on labor, less on producing goods, and increase profit margins, right? Which, of course, leads to higher stock prices. So that was a pretty big number. I mean, it came in almost, well, not almost, twice expectations. And you can see previous month was actually a negative print. So there's a big, big swing in favor of productivity, and I think that's probably the number one thing that if you were going to point to why is the stock market relatively happy here today and not continuing yesterday's meltdown. And of course, we saw Japanese data also very weak overnight. I think it was this one print here that sort of caught people's attention and went, "Whoa, wow, that's kind of interesting." So anyway, we'll see how that plays out. Does that actually translate into the jobs numbers tomorrow? Just try and remember that this non-farm payrolls number tomorrow is it's highly, highly manipulated over the years. It's subject to massive revisions in the months coming down the road. It is often very political. So it's not going to be well, unless of course it's just some absolutely insanely huge number, either to the upside or downside. I don't think it's going to be hugely market moving, but I can definitely tell you a lot of people are sort of waiting. In fact, making it a habit to go and hang out with Mr. Hoagland first thing this morning. Actually, I was going to join their Top Step Combine. They're only like $50 or something. I mean, what the hell? I'll throw $50 at Top Step's way just to see if I can prove that I can still jump through hoops on command. It's probably a good promo for the site and sort of confidence in TRI as a leadership program. But there's something wrong with their platform. A bunch of people were complaining there this morning. So I wanted to wait for all that dust to settle before I go and start considering joining their site again. But anyway, so I was in there listening with Johnny Hoagland, and of course he's old gnarly futures trader. He was quite commentary full about non-farm payrolls tomorrow. Now maybe you might want to take today a little bit lightly because tomorrow clearly is going to be a huge fundamental driver. On top of that, like I said, we are in the middle of earnings season, and some of these companies coming out, they're kind of getting beat up here on the earnings results. There's another one. Look at Qualcomm, just getting absolutely smashed here today. And yet the headline here is these guys are saying falling demand for smartphones, slumping smartphone sales, that kind of stuff. So, if you, unless you actually can produce the numbers and the numbers have to even exceed expectations, it's a tough uphill slog here. Now, today's numbers, you can see does Anheuser Busch and Budweiser recover from that whole Bud Light fiasco? I don't know. I'm certainly not going to comment on that. Interesting to see companies like Regeneron. I wonder if you guys even remember Regeneron, right? And good old Trump and him basically doing like public endorsements of public companies as a publicly traded companies as a government official. I don't think you're supposed to do that, but I think there's a lot of stuff with Mr. Trump that you're not supposed to do, which he did anyway. But anyway, so that's kind of a funny side story. What's that? Becton Dickinson off a bit. Oh, the Southern Company getting slammed. Interesting. Canadian Natural Resources, an oil company. Oil stocks have actually done relatively well. In fact, I think ConocoPhillips, there's another oil stock came out with earnings this morning. Hanging in there, and the energy market actually looks pretty good. I have been talking about energy recently, looking pretty optimistic. Whoa, air products and chemicals. Boom, big hit there this morning. So you can see the earnings. We are sort of full swing in earnings season, and they're, by either punishing or rewarding. Not too much rewarding here. Oh, there's one reward. Who's this? This is Mercado Libre. No idea who the hell those guys are. Internet retailer out of Uruguay. Oh, there you go. Good blue chip quality stock. $1,500, $1,300 a share. Jesus, those Uruguayan companies are expensive. Anyway, so where am I going with all this? Clearly, we got two behemoths coming out after the bell this afternoon. So as a result, Apple and Amazon, big influencers, and it's interesting in the tech space. Like we said, PayPal, kind of tech space. Qualcomm, definitely tech space. So everybody's sort of sitting on pins and needles. What the hell's going to happen here? And unfortunately, because of this, I don't think a lot of people are taking huge bets here just today. And you can kind of see on the indexes, we got point zero. What's that? Is that even a one? No, it's 0.07% move on the Dow. NASDAQ up 0.01. So basically the whole market's flatlining, getting ready for the big earnings releases after the bell here from Apple and Amazon. And then secondly, the big non-farm payrolls number out first thing tomorrow morning. So with all that said, as I had pointed to earlier, like the one good bright spot this morning, I suppose we could have seen some more selling following through yesterday's drubbing. But I think the one bright spot here this morning that caught the market a bit by surprise was that non-farm productivity number that came in quite a bit better than expectations. And you can see the unit labor cost quarter over quarter came in about half of expectations. So you could make the argument that, Mr. Powell has basically said he wanted to bring pain into all of our Joe Six-Pack lives. I think to all intents and purposes, he's done that. The problem is that the inflationary pressures are still incredibly strong. And in a weird sort of way, with the actual downgrade of U.S. debt here, that's actually, I don't know whether that's going to be interpreted as inflationary, but it's definitely going to mean higher interest rates. So in a weird sort of way, this is the long bond, sort of looking at the farther end of the curve here in the States. The downgrade's not helping the situation here. So obviously, with the downgrade from AAA down to I think it's AA plus or something, there's actually a lot of funds and stuff that are not allowed to own U.S. Treasuries now and pension funds and stuff like that. And so they have no choice. They must liquidate. And so that's where you're seeing a lot of this selling. It's not necessarily like, the economy is booming. It's that with the corporate downgrade, they have no choice but to liquidate their bond holdings in the respective country. And the cost of everything for the United States, for the US government, and of course for the consumer, because this will be translated across like consumer rates. You can see bond prices are falling across the board. I suppose the only place where they aren't falling in earnest here today is the 2-year, which really follows along sort of like Fed policy very closely. So anyway, point of the matter here, what I'm trying to mention here is you can clearly see interest rates are still heading higher. And it was sort of a debate in the marketplace. Were we going to bottom here and then, on a weaker economy, the long bond starts to rally, long interest rates keep heading lower, and that sort of adds fuel to the fire to the yield curve inversion problem that we have. In a weird sort of way, you might actually find, and I don't know whether a lot of people in the marketplace are even considering this, you might find that the downgrade of the US bonds forces the long bonds price down as there's more selling, which forces yields up, which actually flattens out the yield curve and actually solves a lot of the problems with that yield curve and its implication of recession. So that'll be interesting to see how that plays out. And that's a curveball nobody's expecting. Anyway, okay, so hopefully you got a pretty good idea of what I'm seeing here in the market. US dollar was ripping quite a bit higher. The data itself, I don't think it really actually supports the idea that the Fed, especially with that massive productivity increase and the unit labor costs decreasing, I think it, to all intents and purposes, it kind of tells the Fed that, okay, they don't have to like freak out about inflation anymore. They are getting in front of the curve. So, have we seen the sort of meat and potatoes of this US dollar index rally? Is that now behind us? We are in actually technically reload short zones again. We are back above 100 comfortably. I wouldn't be surprised if this US dollar index does have to oscillate around the 100 level, which means we might swing back down against these lows, and that might set the stage for a latter summer stock market rally. So we'll watch how we're doing. You can see divs are starting to build. We do have trade location. So, as these divs firm up more, if we start to get bearish structure like a big fat M or something, and these moving averages all come together and we roll over nicely here, that will probably set the stage for that sort of maybe September, October rally. Then, of course, we have to always be cognizant heading into the latter part of October. Do we get some sort of flash crash to spook everybody? One thing I will say that, and we'll probably finish off the video here fairly soon on this. This hasn't topped out yet, and we got a V top. We just went to a new high. We only have a couple bear dips. We do have some pretty big foggies still floating out up top here that could be hit. So I don't think this is done. I think it might take a little bit of back and forth, maybe the next week or two. And as that sort of next 2 weeks kind of idea plays out, that's when I think things like the breadth indicator and stuff for the stock market starts to clean up. So we've been talking about how the breadth, I mean, we never really got egregiously overbought. Notice the red line, the absolute best we did is like into the 60s, low 70s. Teal, we did get up into the above 80s, so that was getting a little toppy. We are cleaning up. You can see red line now below 40. So if this goes on another week or so, we're going to actually start getting oversold. Teal still got some ways to go here, so I mean it's still above 50. You can even see it in the histogram that we're starting to get washed out, and a fantastic sort of timing tool is when you see the histogram is both oversold on both the short term and the medium term basis, get ready for a killer buy signal. And then conversely, if you see short and medium term overbought, get ready for a killer sell signal. We're not really getting signals either way here. I mean, I don't see anything dramatic on the medium term. If anything, one thing part of the market that does still kind of leave me scratching my head, but might want to check in with Sjord and just see if the data is correct. As you can see, these bonds, they are very, very oversold. So, you heard me talking about how they were selling off the U.S. Treasuries. And Mr. Hendry, actually, if you like Hugh Hendry, he actually likes the idea of investing in bonds, which would be a completely contrarian kind of vote in the marketplace. One part of the market we might want to keep a close eye on here is crypto. You can see in the medium term getting below minus 50. Short term still could use a little bit of a push down here. One thing that I will say that leaves me scratching my head, but I think, I'll just quickly mention it here. I'll go for crypto. I actually did turn back up about a week or two ago. There was the signal there. And it's fascinating how market breadth really hasn't broken down. And in fact, when I look at some of my fun little crypto names, I still think this amp looks perfectly viable here. But then we go over to the memes, and of course, you got crazy things like our, come in you, just absolutely silly names, pressing the new high. So, show me new high and I'll show you a buy. So I will say, I mean, I think it's a testament to the breadth indicator itself that the breadth indicator was basically pointing up for crypto. And while we were kind of pointing up for crypto, but not really happy in the stock market, this is what usually happens in crypto is we kind of just go sideways. If the S&P 500 can firm up and we can actually start turning back up here in earnest, and crypto is still pointing up, oh boy, look out. We could go into rally mode very hard here. I don't know. You might find that, we got a half decent jobs report showing that labor pressures are relatively weak. And you start to see, maybe the Apple and the Amazon earnings come out half decent. We start to see this turn back up. As long as we're still looking firm here, then rock and roll. So, I don't think it's a good idea to get into the business of predicting the future. I've always said that to you guys. What I would just simply say is if the broader market can get a little happier here, and actually, a good analogy of this is we've been watching the Russell 2000. Where is that? Over here. All right. Well, I'm pretty much almost done here. Thanks, Chris. Um, I think I had mentioned to you earlier that some of these big stocks had actually put in reversal bars and were kind of painting that they weren't very happy. And then you had like the big sort of blue chip crappy auto stocks that really aren't auto stocks anymore. They're just really dinosaurs. They've been working their way lower. So that's sort of that broader S&P 500 kind of image. What I would say is this is the market that probably has my attention the most. And if you find that that employment number comes in relatively happy, you find that maybe the bond market settles down and stops surging to new lows and actually starts to base here a little bit. Like, we'll see what the hell the numbers come out tomorrow as. But this right here is basically a proxy on the broader U.S. economy, the Russell 2000, and you can see how it's trying to turn back up here. Um, Interesting how this is a big fat round number, 200 right on the nose there. I would just simply say if you see this above 200, then it means that the market is in rally mode. You can see all this bullish structure. You can see how the moving averages they all came together all nicely and then are all trying to turn back up in unison here. And it might set the stage for a pretty damn big rally here. You can see we were talking spreads here recently, how to play this. Um, Going forward. And then also too, I've been talking to you guys about China. You know me, I'm not never going to invest in this thing. But having said that, traders got to trade. If you guys are interested, I think the levels are painting there, and it sure looks to me like this thing wants to get back up into sort of this 50% level. And there's probably money to be made on this thing if you are so interested. So we're at a really interesting inflection point here. Um, Obviously, like we said there a moment ago, I think the whole market is both waiting on things like Amazon and Apple earnings, and it's waiting on where the hell did I put that? And it's waiting on the jobs numbers. I think the market is basically sideways here today. Being demonstrator of best practices, I like to show you guys on a regular basis how I set myself up, to potentially day trade. And actually, I didn't like anything that I saw here at all. NML for me means no man's land. So when I wake up and I see this, I can actually entertain the idea of being a buyer of gold down here, being a seller of gold up top here. You can see the trend channel, and we're just sort of bouncing around in between here. And you can see we're actually painting lower highs and lower lows here. So nothing for me to do there. And as we go across the board, actually the oil was at an interesting moving average resistance point. But again, I could think about shorting against these highs and ATR and trend channels up top. I could think about buying against ATR, trend channels down below, running a whole bunch of weekend stops down here. But right here, not a hell of a lot for a guy like me to do. Stock market, same sort of thing. Of course, talked to you lots about Mr. Hoagland's commentary this morning. When I first got up this morning, we were drifting lower. I think we've come down and actually tagged that 200 SMA. Trying to reverse back to the upside. No, not that window. I think over here. Yeah, so you can see. But again, I want to have like multiple reasons to justify taking a trade. I would actually call this a tweezer's bottom here. I'd also say wicks and tails like to be eaten. I think there's some unfinished business down here. There really wasn't a hell of a lot for me to do right here. This is a terrible trade location for me. And you can kind of see we're just drifting here. The percentage moves are actually pretty small. One market actually that did surprise me. Now, remember when I showed you that there this morning, crude was sitting right at these moving averages. We could have rolled right over. We could have rallied up. Now that we actually hit ATR and we're coming up against these highs, I could potentially start hunting short setups. The only problem here is it's getting awfully late in the session. And of course, with all the news about what's going to happen after market here, I don't know whether putting on a new position here right now makes a lot of sense. So I do like the idea that we now, first thing this morning, I wasn't at a trade location. Now we are at a trade location. I could maybe entertain the idea of going down to lower time frames and starting hunting setups. And you can see potential divs starting to form. Willie is stupid. You can see all the div notifications, but that's about where that conversation would stop right now. Is got trade location. You can see we're coming up against horizontal support and resistance. We're starting to see the divs start to form, ATR, all that. And then what I want to see is, can I please get some market structure to actually frame the short? And one thing I've been noticing recently, and actually, there's one gentleman on the site that I think is doing great work on this, is just commenting that, if we really think that this is a top and it should break down, we probably should see the market actually come and break that previous low, then give us a counter trend rally, and then maybe some sort of M to short. So as it stands right now, market's still making higher highs and higher lows. Not a hell of a lot for us to do right now. Just let it develop. And then, of course, like I said, we're coming into the latter part of the session right now. So I don't think I'd be doing anything here today. Finish off the conversation with a quick boo at the corn. Just give you some levels that I'm considering right now. Where are we here? I have the screens mixed up there backwards because I had to reboot the computer. Nope, not that one. Where are you? You're over here? Nope. Okay, let's try this again. Not that one. Maybe this one. Hey, there we go. All right. So the corn, and interestingly enough, and I think I even put out a tweet to this effect. This is remarkable to watch how often they do this. They do this a lot with Bitcoin. I did see an interesting news headline today that the husband and wife team that were responsible for the Bitfinex hack a few years ago were actually brought to trial today. So it just goes to show how long it takes for the U.S. justice system to work. I mean, I think they've been waiting trial now for like, I don't know, 2 or 3 years. So interesting how that's played out. But what I do see here is and actually the way that I publicly tweeted it out and stuff was, oh boy, here comes Oprah Winfrey again. Although I'm not quite sure where I have it. Well, I guess we'll just go library. There's so many buttons on this website. It's quite remarkable. Anyway, so I even put a tweet out basically to this effect that sure feels to me like we're back in Oprah Winfrey type market state. Although, yeah, there it is right here. So FUs for everybody. So What that does imply is looking at the price chart itself. Hopefully, everybody looks at this and says, "Oh, well, that's a diamond pattern." And unfortunately, you can't really call direction until the diamond has actually played itself out. So there is the diamond pattern. There is Oprah. Lots of FUs to the upside. It's a new bull market. No, it isn't. Lots of FUs to the downside. It's a new bear market. No, it isn't. It's just a big FU. And really, as it stands right now, we know candle body highs, candle body lows for trade location. Those would be a good extremes, and you could probably do reload zones, and they probably line up with things like fibs. Also, too, wicks and tails like to be eaten, so there is a high probability that we got to go up into this wick here. We also have to come down into this tail. And really, if you're looking for guidance, my simple suggestion would be we can't even really decide which direction this thing's going to go until either we break above that high or we break below that low. So, welcome to your trading range. And my hunch is after the Apple earnings, after the Amazon earnings, after the non farm payroll numbers, after, of course, the center of the universe, the Canadians report their data, we'll have a pretty good idea of what the landscape looks like going forward. And my hunch is you're going to get some sort of range resolution over the next 24 hours. So let's see how all that develops through the rest of today. But if anything, this chart image, I think, is a perfect analogy of today's market state. We are in a range. We've got expanding highs and lows, very dangerous. Direction is almost impossible to call here. And you just have to wait till this range is resolved. I think on the higher time frame charts, I labeled this a narrow sideways channel. I don't really remember the Sunday shows, but there is the channel. And you can see they wash the top of the channel, they wash the bottom of the channel, and we're still stuck in this channel. And I think that's the way it's going to be until you either see this high taken out here, we're above all these moving averages into open space, or we crap out below here and we probably have to come back down, trade back down to value low, and then do things like reload zones and stuff off that previous range. So right now, I don't think I don't think it's in anybody's business to call direction here. It's almost impossible to call right at this moment. So got to hurry up and let this resolve. Okay, I think I'm going to leave the rants at that. PMA for the win. We'll pop on over, do a little after party session with the site members. I think Chris said there were a couple of questions that we could address. And, by all means, if you want to interact and ask questions on the after party, feel free to pop in and ask, and I'll be more than happy to try and help answer. Doesn't necessarily mean I have the right answer, but I'll try and help. All right. Have yourselves a great day. PMA for the win. All the best. Bye for now.